All right, welcome back, ladies and gentlemen, to Ticker Time News. I am Adam. Thank you for joining me. I am greatly appreciated of you for being here with me today. All right, the first half is the quick take on the market today. The second half is to answer your questions. So if you have questions, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. Okay, let's jump right into this one. I have a few things to talk about, a few stocks to talk about as well, with earnings that just came out after the bell today. But remember, the big thing that's going to move markets tomorrow is inflation. What does the CPI data say? Is inflation peaking? Did inflation peak maybe in March? And maybe inflation is coming down a little bit. We really want to watch those month-over-month number, right? If that is flat, that's good news. If that is down a little bit, that's good news. If it is up, that's the bad news that we don't want to see. That means inflation is continuing on its path to record highs. So that's what we don't want to see in the market. And the whole market today, it was unsure, right? We saw this big rally in the morning and then selling into strength, just like we mentioned in yesterday's live stream, would happen. And then we get a rally in the afternoon, back to almost the even line for the S&P 500. Slightly up, just barely hanging on to that 4,000 level. But let's get into it, and quick take on the market, and then we'll answer your questions towards the end. All right, here we go. The S&P 500, it was up 0.3% today as it held on to that 4,000 line for dear life, right? It was a very volatile session in which large growth stocks did all the heavy lifting today. The Nasdaq, it pulled ahead with an entire percentage point gain today. And if we hop over here and look at the Nasdaq, actually it was 1.3% gain today, not just a percentage point. If we look at the Nasdaq, it made a new low yesterday. Now, I don't have volume on, and this is the daily chart. When I squeeze into this so we can see the candlesticks a little bit better in their wicks, the wick of today almost as low as yesterday, but it did not overtake it, which is a positive sign. That's what you don't want to see, right? A positive sign. So today, the Nasdaq got to 12,173. Yesterday, 136. So maybe 40 points, right? 20 points, something in between there for the Nasdaq from yesterday, being up above that, which is great. We would definitely want to see that. Now, moving on, which was, again, big cap growth. That was the mover today. Now, the 1.3% gain in the Nasdaq today, that represented the mega cap outperformance. Now, the Dow Jones, and I'll put that one up here on screen for you, that fell. That was down 0.26%, and that did set a new low for the year. All right. When we go out on this one, yesterday was a new low, and this is something we were waiting for the Dow Jones. Well, I've mentioned this in like every live stream for the past week since this happened on May the 2nd. Things just didn't seem right. Everybody else made new lows for the year, but the Dow didn't. So the Dow did it today. So I should take this circle now. We don't need it there because that was not a new low. That was the new low for the Dow Jones created today. All right. And that new low for the year was 31,887. Is that right? 31,887. Yes, that's right. All right. So the Dow made a new low. Now, the Russell 2000 also slid, but it was pretty much a break even. It was a 0.02, if that's right. If that, yeah, a 0.02. We call that flat, right? So the Dow Jones the Russell 2000 didn't move today, and that's your small caps. They basically stayed the same. Now we have some small cap growth stocks that we're going to talk about in a moment, like Matterport, SoFi. They had pretty good earnings, I have to admit. SoFi improved from last quarter, and Matterport, it finally did something. It finally got those subscribers right and kicked off some growth there for Matterport. So we'll talk about those. So here's your major indices and what they did today. Now back to the S&P 500. And if I mention Ethereum was up 2% today. Bitcoin was up about 1.5% today. So they also saw some gains as well. So here we are on the S&P 500 again. You can see it made a new low today. And it's kind of interesting to look at the 5-minute chart here for the S&P 500. And you can see this all day. Let's bring it in for the day. We had this gap up in the morning, right? And then first thing, as soon as the market opened, it ran up to the high for the day. In the first 5 minutes, the S&P 500 hit its high for the day. It was never seen again for the day. And like I said yesterday, people were going to sell into strength. So a lot of traders who might have got in yesterday or the day before or what have you, and they just wanted to get back some of those losses. They got them back this morning, and that's what sent the market down earlier on. So the session started on a strong note, but the S&P 500, it sank midday and then rallied in the afternoon. You can see that roller coaster here, down, flat, and then back up, and then a slight decline, and then a real big fall within like the last hour or so of the day. But it was really hanging on to this 4,000 line here at the close, right? The last 30 minutes or 45 minutes of the day, it was trying to hold that 4,000 line as tight as it could, because sinking below it is a really weak sign. That 4,000 line, it's a psychological number there. A lot of times in the market, you'll see even numbers. They play a big role in market psychology, right? Especially for those trading around. So the S&P 500, now listen to this. It rallied as much as 1.9% amid gains across all 11 sectors this morning, mostly because the 10-year yield dropped below 3%. Look at the 10-year yield. Remember, we can do this together, all of us together, using TradingView. There is a link in the description for a free account. It takes you to the sign up page where there are paid accounts to choose from, but you can sign up for a free account there. So don't get confused when you see that. Okay. US 10Y to get the 10-year yield on the screen. Now, it was over 3% yesterday. Remember that. And this thing has been a rocket ship. This is the 5-minute. Let me go back to the daily view here. The 10-year has been a rocket ship, just going straight up, right? So it dropping and dipping below 3% is a good sign for growth stocks, right? Now, it was down 9 basis points to close the day at 2.99%. It's now down a little bit further, or you can round up. It's right there on the right hand of the screen. 2.989% right now. Now, the price action in the 10-year, though, was rooted in underlying growth concerns amid news that Shanghai was again threatening COVID-19 restrictions. So by early afternoon, the S&P 500, SPX is the ticker I use to look at the S&P 500. And I'm going to go back to the 5-minute chart here. So by early afternoon, the S&P 500 was down as much as 0.8%, nearly a whole percentage point, as investors sold into the early morning strength on no specific news. just like I said yesterday, would happen. Whenever we get some strength, whenever we get some momentum going up, people are going to sell out of the market, sell out of their positions, close those positions into the strength of the market, causing then weakness in the market. So selling was relatively indiscriminate today, apart from the steady gains in the beaten down mega caps, which we saw in the Nasdaq gaining a whole percentage point, 1.2%, which ended up leading the market off session lows and the S&P 500 back above 4,000 to close right there, 4,001, baby. It got back above 4,000, which is a very important psychological level. Now, we can see this change in the market today by looking, again, we've used it many, many times before, even just this week, the Vanguard Mega Cap Growth ETF. The ticker symbol, write it down so you can check it. This is, you know when growth is doing good versus how the overall market is doing or how value is doing. MGK is the ticker symbol for the Mega Cap Growth ETF by Vanguard here. It was up 1%. All right. Now we're going to compare this to the Invesco S&P 500 Equal Weight ETF, which is a broad spectrum of the market. So we're comparing Mega Cap Growth to the overall market. The ticker symbol, RSP. That declined 0.3%. So that's where you can see Mega Cap Growth did well today. So what I would say is that the mega caps propped up the S&P 500 today. And that's also visible through the information technology sector, which was up 1.6% today. And then communication services was up 0.8%. So a big gap, a big jump for technology. And they were also joined by the energy sector, which was also up 0.9%. Now, on the flip side of this, real estate was down 2.3%, utilities down 1.2%, and your financials were down 0.8%. Those were your worst performing sectors. Now, the more selective growth stocks continued to disappoint. We've got specifically Peloton, right? PTON. It just can't get a break. This is a $12 stock. Peloton is a $12 stock. I'm going to go back to the daily chart. Peloton dropped 8.7% today. Let's go back to the stock chart here. Right up here. This is the high for Peloton. All-time high. Their 52-week high is $129. But every day we move forward in time, that 52-week high is coming down as well. Its all-time high would be $171 a share. And now it's a $12 stock. I guess $13 to be technical. $13.02 because it's up almost a percentage point in after hours because people just cannot believe that this is a $12, $13 stock after being at a high of 171. Wow, Peloton has fallen. Another company that can fit into the more small cap growth is Upstart. UPST. Upstart has totally lost the plot. Down 56%. It's lost over half of its value today. It's lost half of its value today. And that doesn't count the decline that it's been on since reaching its all-time high of $401 a share. $401 a share was hit on October 15th, 2021, and now it's a $33 stock. Man, this is showing you the growth stocks plummeting. And I've got another example for you. It's not as bad as Upstart's 56.4% drop today, not over 6 weeks or 6 months. Just today, it lost that amount. We also have GoodRx. Ticker symbol is GDRX. I like this company. This is a company that I liked. I mean, it used to hang around $50 a share for a long time. Then Amazon came around and started offering something similar to, but not exactly, for GoodRx. Amazon just started shipping medications, and that was enough to bring GoodRx down. It dropped 25.8%. 25.8%. Now, these three growth companies, right? Startup growth, Peloton's not really startup. It's been around for a little bit. But these growth companies have just fallen so hard from their earnings and their guidance. I guess I have one more. I just remembered it. Its earnings came out. Unity Software. Unity Software. Ticker symbol is the letter U. If you were left holding the bag on this one, you feel it. Unity Software has plunged more than 26.5%. 26.5% just in the after hours. Just since 4 o'clock, the past 2 hours, it's lost 26.5% in the past 2 hours. Yeah, I've got this red circle here because this was an area of support where it bounced. But not anymore. Not anymore. This was a $210 stock on the 52-week high. It's now down to $35. So it's dropping. Unity is dropping in the after hours and hitting a new 52-week low of $44. Now a new 52-week low of $35, which will be officially reported on the 52-week slide here tomorrow when the market opens. Maybe it even goes lower than that. It has gone lower since we first loaded the page here for them. But remember, Unity Software is a video game developer software company, and it posted first quarter results that missed expectations and offered guidance that forecast sharper or a sharp slowing down for growth. And Unity has been I guess you would call a metaverse play, right? So this just goes to show that growth startup-like companies playing in the realm of futuristic technologies, they need time and space to grow. You don't have to pile into these companies just because everybody else is. Excuse me. Yep, these growth companies, you don't have to jump into them just because everybody else is. You can wait for your chance. Now, we just happen to be in a market environment right now where your patience will be rewarded. Now, if you were trading, that's different than investing. If you're investing in these companies for the long term, for the eventual metaverse when it arrives, which it's going to take years for the metaverse to get here. If you're curious about what the metaverse is, check out the video that I have. There's a link in the description. It's the metaverse video that I did. It goes into detail about what the metaverse is and companies that are building the metaverse. You'd be surprised at some of them. You'd think that some of the companies in that video, like Disney, for example, what's Disney doing building the metaverse? We know that Meta Platforms is building the metaverse. We know that Unity Software is building the metaverse. Why is Disney building the metaverse? There's a reason. And it's a pretty fun one too, if you think about it. But yeah, today's story, the big story is these young startup growth companies. If you're investing for the long term for a specific theme, trend, you don't have to be first. You can be patient. You can trade these, right? You don't have to buy it and then hold it. You can trade it, especially when you see an economic cycle coming to an end like we're at right now. Especially when you see that, oh, the 2-10 yield, it's inverted. So that means a recession is coming in a year or two. So today's message, I guess I could say, is you don't have to be first on these young growth startups. They need time to grow, and you don't have to rush into them. All right? Especially in this current market environment. Patience is being rewarded right now. Now, another of these companies is Coinbase. They reported after the bell rang today. Ticker symbol COIN, Coinbase. It's where you can trade cryptocurrencies, right? They also announced a new NFT, non-fungible token marketplace, recent addition. This is one of those young growth companies that will have a role in the future, especially as cryptocurrency becomes more mainstream. But they dropped 12.6% during regular session, but the big point was after hours when their numbers dropped. They've fallen 16.4% in the after hours. Now, for Q1, I've got it written down here. They came in with a loss of $1.98 per share, which was a miss by $1.73. That's a big EPS, earnings per share, miss. Revenue came in at $1.16 billion, which was actually a decline of 35.6% year over year. And that missed by $320 million. So a 35% decline, you're supposed to grow year over year. So that's why Coinbase is in a sell-off right now, 16.4%. That's what's causing the sell-off in the after hours. Now, I want to talk about two smaller growth companies, but they're on the flip side of the negativity. Yes, their stock price has lost value, but the company's earnings tell a different story than their stock price action. SoFi and Matterport. I want to talk about those. What about SoFi? Perfect time. Went down like crazy today. Let's talk about SoFi. SoFi. The name is the ticker symbol. SoFi was down today 12%. It is now up 3.42% in the after hours. Now, SoFi, they did something a little bit different today. Earnings are supposed to come out after the bell. But their earnings were actually released ahead of schedule prior to the close. And they reported Q1 EPS at a loss of 14 cents, which was basically in line. It was a loss of 1 penny, a penny difference. And revenue came in at $321.73 million. That was a gain of 48.9% year over year. That's good. And that beat by $37.7 million. And Q1 adjusted EBITDA came in at $8.68 million. And that rose, adjusted EBITDA rose by 110% year over year. That looks really, really good. SoFi even raised its fiscal year 22 guidance. Now, there's a lot of pressure on SoFi because one of the biggest things that it does is student loan. So as the government talks and debates about student loans, that can actually affect SoFi in a pretty big way. Not in a total and complete, but in a pretty big way. So SoFi's numbers look really good. Their EPS improved from last quarter. And that's why it's up 3.2% in the after hours. These are some good numbers. Now, if we look at the 5-minute chart here on SoFi, you can see exactly, I mean, look at this, right? We have this morning. Hold on, let me get this. Okay, so the purple line right here, this purple line that's going vertical up and down, that's 9:30 this morning. That's when the market opened. SoFi dropped hard in the first 15 minutes. And then it was a slow bleed out all the way until we get to, let's see, this would be 2 o'clock in the afternoon, just slightly after 2 o'clock in the afternoon. Then we have this big gap up. Big gap up. And then we get this kind of flat period. And then we get about a half hour, 45 minutes of the stock running. Just running. Look at these bigger green candles. This gap up that occurred right here, that's right up middle of the screen, that's when they released their earnings ahead of schedule. The stock jumped. So this thing would have closed a little bit lower than, let's see what it would have done here. If we take its close, which was down 12%, we would need to add on to that, if it did drop down here, another 7% to the close. So we've got nearly, what would that be, 24% or so? SoFi would have dropped about 24% or so if it weren't for earnings being released early ahead of schedule before the bell rang. So this was a lifesaver here for SoFi being down big today. And being up in the after hours is another great thing. So it closed here. You can see where the candle is, but it's actually up here. Right here is where, oh, I shouldn't make it red. This is where, oh, why does it keep jumping up so big? Whoa, not that big. This is where earnings currently are. I'll make it green here. That's where earnings are in the after hours, being up 3.2%. So the numbers looked really good for SoFi. The business looked good for SoFi. So there we go. Let's see here. So the stock being down 12% today, that wasn't because of earnings. I just want to make sure that's clear. SoFi opened where the purple vertical line is here. That's 9:30 a.m. Eastern. It dropped. Earnings were released. The stock gapped up, ran up. There was some trading going on, so it fell back down, but still closed above today's lows and still higher than the gap up itself. So that's looking good. And that's why you see the stock is like, okay, why was there a big gap up in the middle of the day when SoFi's earnings are supposed to be released after 4:30 or after 4 o'clock when the market closes? Well, this is why. Earnings were released a little bit early today. All right, so that's looking good. And it's been rising in the after hours. Well, it was rising in the after hours when I first were looking at this when the market closed versus when we're looking at it now. So that's good for SoFi. All right, let's move on to Matterport. Ticker symbol is MTTR for Matterport. Matterport, just to refresh your memory on who they are, they're a 3D technology company. They've been talked about before because of the metaverse, because it can create a digital twin of your building. Real estate companies use this thing like crazy. That's how you get the 3D tours of homes. It's because of the technology that Matterport has. It's a nice little company. I personally think that Matterport, and I'll go to the daily chart here and you can see this. Matterport, with the huge boom in real estate over the past 2 years, I think Matterport missed. I think it missed on its opportunity because 3D tours really picked up and became a thing during the pandemic. When people wanted to buy homes and were locked in our current ones, 3D scanning of homes made it real easy to see a home without actually physically seeing it. So I do think Matterport missed out on that a little bit. And you can see they first became a public company on February the 2nd of 2021, initially ran up, traded sideways, then had a big boom at the end of 2021, and then just boom, it just sold off because it is a growth company. Now, when speaking about earnings today, they were up 2.1% during regular session and up 5.6% in the after hours because their earnings came out after the bell rang to close out today's session. They reported better than expected first quarter results led by strong gains in subscribers and subscription revenue. And that's big. And that's one of the reasons why I like Matterport. Anything that's got a subscription, and I like it because subscription means recurring revenue. And you can count on recurring revenue a lot better than you can if you don't have recurring revenue, right? A grocery store has recurring revenue. You need to constantly buy food. A record store, I mean, who goes to a record store? That was a dumb example. But anyways, you don't go to a record store every day like you would a grocery store. So subscriptions, good. Now, subscribers for Matterport rose 70% from a year ago to 562,000. That's great. And revenue from subscriptions climbed 24% to $17.1 million for the first quarter of 2021. Now, while talking about all of these stocks, including SoFi and Matterport, many of which fall into the innovative and growth categories, right? Matterport, it has innovative technology. It's a growth company. Well, who comes to mind when I say innovative companies, growth companies? Cathie Wood. Well, guess what Cathie Wood said today? And remember, Unity Software is a stock that Cathie Wood likes, and it's down 27.2% after their earnings came out. Cathie Wood today said that the global economy is in a recession. And I'm leaning that way too. I mean, our first quarter in the US shrunk by 1.4%. If the second quarter is also a contraction, then we are technically in a recession right here at home. So a global recession right now, it doesn't sound that far off. I mean, look at the contraction that's happening all across Europe. Then she also went on to say today that the recent stock market volatility is a sign that investors believe that the Federal Reserve's plan to continue hiking interest rates is too aggressive. Too aggressive. What do you think about interest rates going up? S&P 500, again, here on the chart, daily view. What do you think about the Fed raising rates? Do you think it's too aggressive? Do you think the 50 basis point rate hike that they just did would be enough? Or do you think the next two meetings, and the next two meetings both being a 50 basis point rate hike, is okay? Let me know in the comments if you think that's too aggressive or if you think it's okay. Because remember, the way the Fed fights inflation is by raising interest rates, which makes it harder to borrow money. It makes it more expensive to borrow money. It makes cost of goods cost more, which in turn causes consumers to spend less. It's all about getting the consumer to spend less. That lowers inflation. That's what the Fed is doing by raising interest rates 50 basis points, 25 basis points, to get you and I to stop spending our money by making things cost more. I mean, inflation already does a good enough job at making things cost more, doesn't it? So Cathie Wood thinks it's too aggressive, and she thinks the market reacting like this over the past week is a sign that investors also feel it's too aggressive. Now, she also said that slowing economic growth will likely benefit the type of innovative companies that her fund invests in. That's an interesting statement because Cathie Wood, if we look at ARK Invest, look at their main fund, ARK, ARKK, which is the ARK Innovation ETF. And let me take a peek here. It is down 56.5% year to date. Now, we looked at this a little while ago, and I've got a buy box here, this green box right here. This is where I put the ARK Innovation ETF as an area of interest, as a buying opportunity, right? And if we look at the bottom of this box, the bottom of this box is about $32.50. And it's at $39.88 right now. So it's getting close to the bottom of this box. We'll see if it falls out or if it gets a rebound here sometime soon, because it has gotten to the bottom of the box before, but of course that was pre-rate hikes, right? That was pre-euphoric run to the top. All right, let's talk about bank stocks for a second, because there was a problem there today. There, specifically, bank stocks were pressured by some flattening action in the treasury market, where the 210, the spread between the 2-year and the 10-year, it narrowed by 11 basis points. Remember what I talked about at the beginning of this, that the 10-year dropped below 3% today? Well, the 2-year increased 2 basis points to 2.63%. If we look at the SPDR S&P 500 Bank ETF, the ticker symbol is KBE. We can see firsthand how the banking sector did today. And it was down 1.3%. So when the yield curve flattens like that, it's not a good thing for banks, right? And you would think that with rising interest rates, that would be good for banks. Sometimes things can be counterintuitive. So banks got dinged a bit today. Crude oil today, that also fell, right? Didn't it fall? Did it fall? Did it fall? It did fall today. Yeah, it fell 3.3%. It actually was below $100 a barrel earlier today. It fell 3.3% to $100 even per barrel. I definitely want to see that thing come down under $100 a barrel today. Another piece of interest in the M&A news, which is mergers and acquisitions. I believe, what senator was it from the Senate? What senator today? Was it Warren? Senator Warren? She proposed a bill to make mergers illegal. I'm not sure how I feel about that one. Fact check me on whether it was Warren or not. But I saw it come across the wire today, and I thought that, that's an odd one. And the reason I bring that up, Biohaven Pharma, the ticker symbol, BHVN. There we go. They were up a whopping 68.3% today. Why was Biohaven Pharma up so much today? Nearly 70%. Because they agreed to be acquired by Pfizer for $11.6 billion, or $148.50 per share. So if you want to make $8.50 a share, you can buy Biohaven Pharma, wait for the deal to go through, and collect your $8.50 per share, because it's right now at $140 a share, but the agreement is for $148.50 a share. There's an $8.50 difference. Why would that be, you ask? Well, usually when a equity, a stock, doesn't reach the acquisition amount, it could be a couple of things. One, since they were already up 70% today, or close to 70%, I don't think it's this first option. But the first option is investors don't believe the deal is going to go through, or investors don't think the deal is a good idea. but it was up nearly 70% today. So I think investors do believe it. I think this falls into the second category, is time. Some people became aware of this news, others did not yet. So it hasn't had time to get up to that $148.50 a share. Also, Pfizer, ticker symbol is PFE. Usually the acquiring company, the company that wants to make the purchase, usually their shares go down because they're spending money to buy this company. And shareholders don't like when companies spend excess money. But Pfizer was up 1.75% today and up 0.1% in after hours. So investors definitely like this deal. So it seems like on the surface, investors think it's going to go through. So you could pick up $8.50 a share if you wanted to buy shares. Now, Twitter is another example, TWTR, right? Elon Musk has a bid of 54.20 on Twitter, right? But Twitter is trading down today 1.46%, another 0.5% after hours, to $47.01. But yet Elon Musk has agreed to buy it at 54.20 a share. So this is another example of investors, maybe this deal is not going to go through, and that's why it's not at the 54.20, because you can go buy a share of Twitter right now at, well, depending on your brokerage, it's already 6:30 p.m. Eastern, so you might not be able to, depending on your brokerage. You could go buy a share at the price here, $47.01. And then if the deal is complete like it's supposed to be, then once the deal closes, you would be paid $54.20 per share, even though you picked them up right now at $47.01 per share. So you're guaranteed to make a profit, right? As a matter of fact, your profit would be, let's see here, closing price. I can't get right on it penny to penny. And then we go all the way up to 54.20. I get as close as I can to it. I mean, that's a 15.2% gain. If you bought Twitter at its current price of $47.01 and this deal goes through, when the deal closes, you get $54.20 a share. That's a 15.2% gain for holding a share of Twitter. So that's a pretty big difference, actually. Maybe I go pick up another couple shares of Twitter. Anyways, back to what we were talking about. Oh yeah, so M&A, mergers and acquisitions. So there's an example. Now the Pfizer deal is an all-cash deal, and for some reason, and investors, again, both companies were up today, so they seem to like this, but Pfizer is paying a nearly 80% premium over their closing price yesterday. So that's a pretty big deal. Okay, we'll wrap this up now. On the economic front, investors will receive the Consumer Price Index tomorrow. That's the CPI report, inflation. How big is inflation going to be? And again, we want to watch the month-over-month change. Did it go up? Did it stay the same? Did it go down? That's all we need to know, because that will let us know whether inflation really did peak or not. Remember back in March, we had a lot of people, well, back in April for the March CPI data, we had a lot of people in the news talking about peak inflation. Was it peak inflation? Tomorrow's data is going to tell us. We also get the weekly MBA mortgage application index, and that lets us know how many people applied for a mortgage. So it's just more data to add to the housing market. And you know my theory that the housing market is slowing down. So it's just more data that we can put into our thesis on the housing market. And then inflation. Tomorrow, the main story tomorrow will be inflation. And inflation will drive the markets tomorrow. If inflation comes in higher than expected, then you can expect a new low for the day, a new low for the year, okay? If inflation comes in somewhere in the middle, then the markets will probably react somewhere in the middle, right? It won't be an extreme sell-off. And if inflation truly did peak in March, then the market will rally. And this information is released in the morning before the market opens. So a lot of tomorrow's action will most likely take place right around the open tomorrow. So be cautious of that and be careful of that. To get that information, just go to your favorite search engine and you can type in CPI. Just type in CPI data, skip all that other stuff that pops up and go straight down right here. CPI home, U.S. Bureau of Labor Statistics. This is where CPI data is released, and on their homepage here, right here where it says news releases, okay? This is where you want to refresh the page over and over and over, because this is where the information will be, right here. Right here where we have news releases. This is the box you want to watch right here. Because tomorrow morning at 8:30 a.m. Eastern Time, this data will be updated and you'll be able to see what inflation did. Up, down, in the middle. So that's the big thing for tomorrow. Okay? All right, we'll wrap up everything for today. I greatly appreciate your engagement. I greatly appreciate the question. I greatly appreciate you watching, and I greatly appreciate you being here and all of us learning to become better investors. And I hope the information can help you along that journey, because that's the big thing. If you could please help me out by clicking that like button, that lets YouTube know that this was a decent video to watch. Take the URL and share that wherever you can. That lets other people know that you thought this video was informative and useful. And click the first link in the description. I'd love to see you there. Ton of great information that we release constantly throughout the month, constantly throughout the week for you. Useful information that you can use. And I would love to see you there. Is that a ticker? Or you're welcome. Okay. Well, thank you very much. I greatly appreciate that. Okay, so the CPI question right there. Let me go back and let me open this up right here. So here's what I've got for CPI. Let me just go over here right quick. Okay, so what's on the screen here is last month, all right, for the consumer price index, right? And you can see that it increased 1.2% right here in March on a seasonally adjusted basis after rising 0.8% in February. So what we want to see tomorrow is we want to see it lower, right? We want to see we want to see April, which is the report for the consumer price index that's being released tomorrow at 8:30 a.m. Eastern. We want to see it lower than what it was for March. And then when we drop down to, let's see here. When we drop down here to the menu where it has it broken down, we want to look at the top line right here, all items. And okay, good. I can draw a line straight across. All right. We want to look at this. The 12-month ended March 2022. The far right column was 8.5%. We want to see it under that percentage point, okay? And then for the month over month, from February to March, it was 1.2%. We want to see it under that 1.2%, okay? If we see it under those 2 points, annually adjusted below 8.5 and month over month 1.2, that should be showing inflation is decelerating. If we see it higher than these numbers, then we know that inflation is continuing to rise. My gut feeling is I'm not so sure inflation has slowed down yet, and I'm not so sure that we've seen peak inflation. I'm kind of leaning towards it might be a bit over. Inflation may have grown, just because when you go to the grocery store and you fill up your cart, $100 in groceries last year versus $100 in groceries today is not the same. And you can see it when you fill up your cart for your groceries, whether you buy them weekly, every other week, or you go on a big monthly shopping spree for your groceries. You can see it and feel it by what's in your cart. That's why I think, and that's really my only reflection for why I think it could be higher. And when they do the CPI report, remember too that they take out the largest contributors: gasoline, shelter, and food. When you include those 3 items, inflation is huge. I mean, just look at how much oil has gone up over the past month. I think the report out today on the average per gallon cost for gasoline across the U.S. hit a record high today. So just a few thoughts there on, let's see here, inflation. So you don't have to go back to watch watch anything. I think I mentioned it briefly, but if not, we just went over it. And again, sorry for looking off camera here. The chat window is over here to my left side here. I greatly appreciate that. I really do. That is awfully kind of you. Just bought SoFi today, very cheap. Hope it does better from now. yes, I do think SoFi is a good company. Just remember that it's a growth company, so it's going to see some bumps and rallies and falls. It's a longer term play, so just keep that in mind. It's a longer term play. But I do own SoFi. I hold SoFi, and I love it. I think they're a great company. Just, I guess what I'm trying to say is make sure your expectation for what it's going to do kind of matches the reality of what it's going to do. Growth company, it's liable to bounce around quite a bit, and it's a longer term play. Put those SoFi back up here for you. Just as I mentioned that, I just want to make sure that your expectations are good. I can't believe that it's fallen down to $5.42 a share, and that's after it popping in the after hours. When you look at where it's come from, I mean, this was easily a $20 to $25 stock, 3 different periods in its short little life here. So keep your expectations in check, and I believe in this company long term. So looks like you do too. Okay, we'll wrap it up unless there's anything else. I don't want to miss any of your questions. So in case you're typing something, I'll give you a minute. And if not, we'll wrap it up. And while I give you that minute or two there, make sure to take the URL, share it wherever you can. That helps. Clicking the like button, that helps. And I'm here every day the market is open after the market's closed to talk about what happened today, why it happened, and the most important thing are your questions. So that's why we're here. That's why we're talking about it. Oh, you are welcome. No problem. Yep. Every day the market is open after hours. I go live and I talk about what happened today, why it happened, try to pick a theme or topic for the day. Sometimes it matches with what happened during the day, sometimes it doesn't. And just share my thoughts on everything and then answer your questions. And your questions are the most important part. There's been several occasions. I know I titled this with the title card, Quick Take on the Market. And I get jokes every once in a while about it being an hour long and that being a quick take on the market. Sometimes I can get carried away with just sharing my thoughts. But yeah, as long as it's providing value and somebody is gaining something, then I am definitely thrilled and excited, because it's definitely a journey when you start investing, and it's a tough game to understand, and you can make a ton of mistakes. But my motto is always to learn from those mistakes, grow from those mistakes, and become better. And that's it. It's that simple. Always move forward, look forward, and learn and grow. Learn every day. Learn something new every day. All right. Well, you are welcome. That's awesome. I don't know if I touched on anything real big, but rewatching, that's fine. You can absolutely your time. You can choose to do that. If I just don't know what information is the most important sometimes. So it's out there. It's there for you to watch and hopefully to learn a thing or two along the way. All right, so I'll wrap it up here. Greatly appreciate it. You are definitely welcome. I appreciate everybody who watches, and I'm glad I can get to your questions. I'm glad we're not one of those shows where we're too big that we can't answer your questions. So I love the intimacy about this and being able to talk directly to you through the questions that you ask. So, all right, everybody, thank you so very much. We'll go ahead and wrap it up then today, and I'll see you tomorrow after the market closes, and we'll have inflation to talk about for sure. Okay, thank you. I'll see you in the next one. Take care.